Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Just another fun-filled adventure. Let's see what do we have going on here. It seems like the dollar just keeps on finding ways to be strong, which is kind of fascinating in its own right. I mean, that seems to be the action of it all. Uh, there's talk. There's some really strange talk about. Let me see if I have the volume here too. Oh no, we have it right there. There's some really strange talk about the Federal Reserve now in the United States actually putting money into everybody's bank account. When they talk about helicopter money, it's never been even remotely, I mean, remotely even thought of compared to the way they're suggesting now. They're just going to just deposit put money in everybody's bank account. $600 or $800 or whatever it is. But in the end result is that is that is that kind of took the markets by surprise yesterday. I think it was the Chicago Fed chair that mentioned it, and it really put a very strange flavor into the market. I don't see any way to describe it. Let's see. Do we have sound here? I'm not sure if we have sound. Let me just double check there. Sound? Testing. Yep, there it is. Okay, we do have sound. Yeah, so as insane as that sounds, it's even we're really I mean, talk about going into uncharted territory. I mean, it's wild, just wild. No other way to describe it but wild. So that is probably what's having a great effect on the markets right now. Is they're probably trying to figure out. I mean, if I was a money manager managing a few hundred million, or a few hundred billion, or 10 or 15 billion, I'd be stalled this morning. I'd be like, what in the world is going on? Are things that upside down that we need to, the Federal Reserve is going to start putting money directly into people's accounts? I mean, that is really probably has the markets relatively stalled. I mean, if I was a money manager right now running public capital, I'd have to be second guessing my decision making process at the moment. Like, okay, do I need to go buy gold? Do I need to be long a lot of puts? Do I even attempt to invest in? Let me open up some other things here. Do I invest? Do I stop investing? Do I start selling collars? I mean, I could see literally money managers right now thinking, "Geez, I need to put collars on with options," because what does this all mean that the Federal Reserve is doing something like that? I mean, that's the wrong currency. Let's close that currency. And so that is definitely something that's probably got the markets totally in confusion. I mean, I don't think that I can describe it any better than that. Federal Reserve. Now, I think that the Federal Reserve is really compensating for, the Speaker of the House not willing to float the stimulus that they have the money already voted on, 5 months ago, and it's sitting there, but she refuses to release it. And so maybe that's part of the reason out of it all. They're thinking, okay, we're going to supersede these crazy political people without saying they're crazy political people, and so that could be that could be a major slice of what's going on there, and that would not surprise me any. What am I doing here? I'm looking. That's combos. Okay, I want to go to it's this one right there. There it is. There it goes. Yeah, so traders, that is probably why we're seeing some of the stranger markets. Bitcoin, hello. You would think that Bitcoin itself would be a safe haven, but that thing is going down with the rest of the marketplace, which is disturbing. As I've said for a couple of days now, it's kind of like a disappointment. I was always hoping that the Bitcoin would become a true alternative, like the way gold is, only in a better way. But no, not really. Oh, we don't have a red line. Get a red line in there. Is it through? Yeah, it's through. Just need to fix this, like so. There we are. And there's the red line. There we go. So yeah, we're looking at some very, very strange times when it comes to understanding, uh, where our marketplace is. Uh, I don't think I can describe it any better than that. Is that I don't think I have words for it more than it has to have money stalled. It must be confused at this moment. When that Fed president came out with that statement yesterday, in the mid morning, it put a chill into the markets, and they did not look back. They rolled over again. Money, in other words, it's like a halt. I was expecting to see the volatility pop up. Volatility didn't pop up. No signs of chaos. It was really, again, it was truly a very confusing event, and I can see it, rolling through the markets this morning. You can see it. It's not going away. It's really not going away. So, what do we got here? Hi, could you look at soybeans this morning? Middle age, muscle. I like that. And Mahadi, hi, how could you trade? Let's see, how you would trade gold. Okay, well, let's first take a look at soybeans. Let's put soybeans up. Okay, right there. There we go. We're going to put those up. And that's a start. Discard. Okay, so good. Forward that. That's 19. There we go. All right, and that is March red wheat. Let's slide over to soybeans. There is November beans. November beans are moving down. Went into a daily sell there yesterday. You can see we're still in a weekly. So right now we're stuck into a neutral. We've been in a weekly buy since here. We were in a daily buy since here, and then we, slipped into a sell for one day and went right back into the buy right there. You can see that. And now we are pushing back into the sell there. So there's a little pressure on the soybeans, and it's had a nice run, and I don't think there's any I saw the story again from China today about the slaughter, or I guess it's the lack of pigs. That's what it really comes down to. Is inventory in hogs is diminishing dramatically. They're having a lot of food problems there in China, and so I guess that put the pressure on the grains because they got to feed those little beasties. They got to get something in their bellies. You can't take them to market if they don't have, they don't grow. So that is pretty much where it's at. I see now. All right, now let me see. I have to just create two new. Let me do this. I have to do two more emails, and then I am done for that. And then we can go. Now let's jump over to gold and talk about how we would trade gold. Let's do that real quick too. All right, and let's see, right there. And then we'll do that. And there is gold right there. Gold has been in a sell, as you can see right here. We draw a line in there. Our signal tells us right here. White line is minus this zero line. The histogram is minus the zero line. It means a sell, red, especially with a red dot or no dot, one or the other, as long as it's not a green. And that's the first day initially. And so we've been in a sell, confirming each day more and more and more. It's not able to close above the zero line, either one of them. At the same time, we are in a weekly sell from here. And so it's been saying to be shorted. That's what it's been saying there. So does that help you out there, Mahadi? So how would I trade the gold? The way I always trade it, and that is that it's by the math. And the math said to be short up in the, where was it? The short said to be short in the 1960s area or 1970s area. And now where's it at now? It's trading at 1857. So it's gone down about 100 points since we went into a signal to be short. That's how I trade the gold. I hope that helps out. That's just the process of it all. Let's see, compose. Let's see, I got to go to inbox and do this. Which one is it? Right there. And I'm just waiting for your response there to see if I can help you out with anything. And that is the name of the game there. There we go. Nothing so far. So yes, that's where we're at with the gold. We can do is this while we're waiting for a response back. What we can do is throw the euro up on there and just take a look because that's what we normally do. And again, there's Bitcoin going down with the rest of the gang. It's just another asset. That's all it is. There's nothing more than that. It's not. And I mean, it's a nice technique. A nice system in the sense that you can, move it a lot freer than you can a lot of other products. But it's not. It's not a. What's the word I'm looking for? It's not anything counter to the natural market forces. When gold and stock markets are falling, Bitcoin joins in. We were hoping that it would be the opposite. It could be an offset, but it's not doing that, and that's just the way it goes. It's just okay. So yes, thank you. It looks like it's not rebounding. Well, I think you're talking in a very monolithic way. Let me describe that. This is not an insult. You're talking like it's static. Like it doesn't move. And this is all products are dynamic. They all are. They really do. They're very active. Let's put it that way. They're very active, and the way you're framing it. Yes, thanks. Looks like it's not rebounding. I guess what it is that I'm looking at it on a daily and a weekly basis. And are you looking at it like in a 10-minute or a 1 hour or a 4 hour or what time frame are you looking at it? I think we're talking about two different things here. That's what I'm saying really. I think we're both talking about two different things. You're talking about gold on a shorter term basis, or are you looking at it on a daily and weekly basis? And so that's the key for us to have a meeting of the minds. You and I need to understand what time frame you're trying to look at to begin with. Let me see. I'm looking for yen here. No yen there, so we got to go find the yen. Let's find the yen. Where are you, yen? Maybe there? Right there. There we go. So yeah, let's give me an idea of what time frame you're thinking about, and then we can see if we're both on the same page. That would probably be better for you, because in other words, you don't look when you say you don't see a rebound. That's correct. My work is saying there isn't a rebound at the moment. Now, it doesn't mean that he can't start doing it this afternoon or the next 10 minutes, or what I mean. That's not. That's the thing is that what we do is we try to tell the math. We don't tell the math or the product what to do. It tells us, and so. That's kind of where we're at the moment with gold. It's telling us that it wants to go down. And so I guess you're correct. It's not doing a rebound. So that's right. You got that right. You can look at the J4X. Let's take a look at gold on J4X and just take a look at the old-fashioned style of, where the lines are, not where they're competing with each other, but where they are. Here, watch this. So right now we're looking at spot gold, and you can see that we look at these lines competing with each other. So I don't usually pay attention to them being down at the bottom of the range or the top of the range. I kind of think of them more as just competing. So in other words, the white solid line is really still moving down, and this is moving down, and this is rebounding right here, the purple one. And so relative, I'm saying this thing's still trying to tell us that it wants to go down, but we know it's at the bottom end of the range. So that would be like an indicative signal that maybe it's going to try to rebound. So that kind of matches what you're suggesting there. 4 hours. Okay, yeah, let's go take a look at a 4-hour chart. I just need to put this I'm sorry. I need to paste this. Let me paste this in. I need to fix this really quick, this chart here. And then what we'll do is we'll go take a look at a very short-term chart. I had to restart my computers. I had problems this morning. Let's see that. There we are, like that. And same thing here. Let's change this there to purple. And so I didn't get this mailed out when I wanted to get it mailed out. There we are. So now, let's see. Okay, so there's the buy there. Let me just put the buy into that, like that. And then it's, I guess, moved over one like that. There we are. And then there's the sell. That was safe enough. Yeah, that's all good. I think we have all the lines correct there. Good. Let's save this. Oh, let's fix this too. We've been looking at this with candlesticks style. There we are. And let's save this. Save. And it's let's do this. That is ZZ USD JPY. There we are. Save. And then I can send this out. And so, yeah, let's take a look at the shorter term and see if I wouldn't be surprised if it's trying to bounce right now. That wouldn't surprise me at all. Let's see, you're looking at 4 hours to 1 day. Okay, so let's go find a 4-hour chart. There we are. Let's see, I know we had one of these parked somewhere. Let's go right here and open this up. Because I notice a lot of traders over the decades, I've seen it, you know, for a long time, people like to trade like 4-hour charts. And that's kind of interesting, you know. Okay, so let's go find gold. We'll take it right from, where is it? Right there. And we'll copy that. And then we'll paste it right here. Let's take a look at a 4-hour chart with our math. Format indicator. Instrument. Settings. Hours 4. Let's go back 99 days. Let's see what that does. We can do a shorter term one just to see it fill in first. So let's try 30 days. Let's see what that does there for you. Okie dokie. Doing a lot of work there to fill in. We'll see what we get out of this. Hold on a second. Don't get too panicky. Let's just see what it's doing there. Okay. There we are. And that's 21. There we are. All right, let's go back even shorter days. Let's go back 10 days. Let's see if that'll help. Oh, it's bars back. Okay, let's go back days. There we are. Still doing bars again. Days. There we are. I always find, you know, questions like this really good. I do. I find it, you know, because I don't, you know, there's only so much you can look at. And because there's a limit to how much you can look at, you know, and be able to comprehend, I find it fascinating when traders like yourself go, okay, can we take a look at this? And I go, yeah, let's do that. I want to see it just as much as you do. I find it fascinating, you know. And so that always fires me up. I think it's wonderful. So there you go. It's still not doing anything. All right, let's try. Wonder if we have to do this. Let's format this, format instrument, and delete that altogether. Remove that. There we are. Connecting. I see this might be having some problems because I had to restart. Oh, here we go. It's right there. Okay. So some of this is filling in, and the rest of this is It looks like we're going to have a problem with trying to get this to do its thing for the moment. Let me just go back. Let's see if we can just get like 6 days. It seems to be nothing so far. What we'll do is, Mahadi, we're going to come back to that, okay? We'll come back to that because I'm curious to see what it looks like on a 4-hour too. I want to see if it's really trying to turn back up again, just like you're looking for. I myself will wait. I wait for the math to tell us, so I don't really think in that fashion. In other words, I don't, because I'm spoiled by the quality of our math. But here's like the daily, and it's really, we got this white line moving down. The weekly line moving down. The histograms are moving down. There's nothing at the moment trying to tell us, like, you see where, like, at least it starts to stall out and start to move up on this, or same thing here. You start to see it trying to stall out on a daily basis and start to show it's going to grab some light, upside movement. Same thing here, and we're not even seeing that. This thing is just rolling over. So when it fills in, we'll check it every so often to make sure it fills in. Let's go back to that really quick. Where is it? Let's see. So let's move that over. Let's close that one right there. Save workspace. Close workspace. There we are. And then I guess we got everything done, don't we? Okay. We can close this workspace too. And then, okay, I think we're there. And it's just this one. And we can close this workspace. There we are. And so it's this one right here. You can see it's not filling in yet. And either is, you can see here underneath here, they're backfilling. So these guys are all backfilling. And as long as they keep on backfilling, I can say that 10 more times, but once it does, we'll start to see some data come in. So we'll keep an eye on that. But just going back to the daily, you can see there's no sign at all of any strength coming into the market yet. All right. Let's see what else we got going on here. Let's take a look at the euro, because it looks like all the currencies are, well, and I don't blame them. They're probably rolling over. They're buying dollars. Can you imagine? Some of the Europeans are probably thinking, and a lot of people are in the world, hey, if I open up a bank account in the United States, does that mean the Federal Reserve will put some money in there for me too? That's what I was thinking. I was thinking, if I have X amount of bank accounts, are they going to put the same amount of money in every bank account? Is every bank account in America going to be given money? Or is it every individual? So in other words, if I have 3 bank accounts, do I get 3 of the free monies? Boy, talk about helicopter money. They used to talk about helicopter money, but to just directly deposit it right into your bank account, oh my God. That is, phenomenal. That's like, no wonder the markets are a little in tizzy over the last 24 hours. That's a lot to be said. And you know what? We can go like this really quick. Let me go put it up on the screen here, the story. That's the amazing thing, is that I read the story and I'm just still shaking my head at it. It's like, what? Let's see. Oh, I don't see it now. I feel a storm approaching. Is that it? Let's see. Let's see. U.S. Turkish drops like a stone after Turkish central bank unexpectedly hikes. Ooh, let's see what Turkish lira is doing. That is unique in its own right, always. Okay, so they moved it down. That's what it is, I guess. Yeah? No? Maybe? 63. I thought 69 was the high yesterday, so it's down, right? It's a 7, right? And just making sure it's a 7 handle. There we go. And there's our work. Yeah, okay, so they're knocking it down. You can see it there. They're knocking it down. Okay. Now, let me see if I can find that story about them putting the money directly into everybody's bank account. I should have posted. I think I saved it. Let's see. I know I posted it. I'm sure of it. That's one of the weirder things I've seen in a long while. Lawmakers call for action. Not there, not there. I guess not. I guess I didn't save it. I thought I did. Bummer. Yeah, so if that's probably the weirdest thing you're going to hear in a long time, and that is the Federal Reserve's talking about directly depositing money into your bank account here in the States. This way they want to crank up inflation. Let's see. Let me see if I can hunt this down on Zero Hedge. I'd like to show this article. It's definitely one of the weirder ones, that's for sure. Where is it? There's a falling glass. I guess that's the Federal Reserve. I don't know. What is that? Let me just switch this over for a second. There it is. Look at that picture. Out in the middle of an ocean going nowhere. So, I mean, I think the markets are a tad nervous. I also, what's really interesting is yesterday I got a message from a brokerage house that said that the margins are going up over the next 23 days, starting on the 28th of September. What news sites? I use Zero Hedge. I look at the Washington Examiner and the Washington Times. I follow the Telegraph out of London, Hayom out of Israel. What else do I follow? I read, mainly what I do is I read the actual news. In other words, I don't, in other words, I look at the transcript or I watch it live or recorded. I don't usually let most newspapers feed me. Epic Times, NTD News. I kind of lean into those sources. Que pasa? VB, que pasa? Yo, yo, yo. Did you see that thing yesterday on the Federal Reserve? You're in my time zone. I think you're in my time zone. Yeah. Did you see that crazy stuff? Oh, let's check the gold again. Let's see if we can where they're going to directly deposit money into the bank accounts. There we go. Okay, so it's starting to fill in here. Format indicator. We'll get rid of that. There we are. So it's filling in now. You can see that we've got the white bars. Now we just need to get our math to fill in. Once this fills in. Let's see. So, let's see. Mahadi says, if you would invest right now in cryptos, which one would you pick between? To be honest, I don't think any of these cryptos mean anything more or less than anything other asset. Let me show you this thing here. We've talked about this. We're really disappointed that they don't go up when markets are going down. They don't go up when gold is going down. I think that I know that Wilco tells me that there's some really good ones. There's some better than others. Ether, maybe. I'll have to check and see. And we can always ask Wilco more about it. But overall, I really don't. I've become surprised that the cryptos don't respond independently. In other words, gold goes crushing down, and why isn't cryptos going up? Stock markets are falling. Why are cryptos not going up? I don't. In other words, cryptos. I'm a big supporter of cryptos. I like cryptos, but I don't think that they're. Obviously, there's probably a better one versus a non-better one. Less quality. I'm sure there are, but the thing is that they're not. None of them are going independent. They don't move independently from the general market. So, They're not. You can't look at them that way. But we can ask around. Wilco has a really good flavor of what's going on. Now I'm trying to find. I had to reload that daily chart, and let's see, what's the window show? Format instruments. Okay, there they all are right there. Matter of fact, I'll remove that one. Maybe that'll help a little bit. And so, it shows that the cryptos don't move any different than the rest of the asset classes. Daniel, I mean, not Danielle. Daniel, how you doing? Let's see, what else we got going? I don't know if you just tuned in. I've been just rambling. I've been trying to find the story where the Federal Reserve was the headline for almost 24 hours now. They just pulled it, where the Federal Reserve is talking about directly depositing money into the private bank accounts. Let's see how this is doing here. This is still filling in. Still backfilling. Let's add a few more days to this thing. Let's go back one more time. Let's try 8. We're putting something in there. We're putting a 4-hour gold chart in. We're trying to figure that out. Check this. Okay, what is it? Oh, ZH headlines. I drops like a stone. Turkish central bank unexpectedly hikes. Yes. Here, I'll show you that. We just took a look at that. And it's still up there. You can see it right there on J4X. Not too bad. I mean, the white line is not piercing this dotted line. Let's go over to our 4X right there. You can see right here on our Chicago Quant, same thing. It's still holding up in a daily buy. We got a green dot. It's really bounced. Look at that. I mean, it bounced. It's as Mahadi is looking for. It's doing its bounce already. It's over 50% back from the lows. So this is not much damage from it. In other words, I guess they're trying to slow the craziness that's going on in it. To me, I think it's going into the 8 handle. We're going to move from the 7 to the 8 handle out of nowhere. That's the attempt right there. So what did they do? They raised rates, was it? Where was it? We just had the story up there. Here, I'll show you the story. Trump threatens veto of new action rules, imposes new social distancing. Traders on the edge as futures fail. Here it is right here. Here's the story. And we'll put this up on the screen for you. Minus the furniture there. Let's see. Turkish lira drops like a stone after Turkish central bank unexpectedly hikes by 200 bips. With the Turkish economy hammered as a result of a collapse in global tourism. Is that what they're losing? They're losing tourism. Okay, the country's FX reserves dwindling by the day, preventing the infamous Turkish intervention to stabilize the currency. Moody's warning that Turkey faces, it's probably the Moody's warning then, Turkey faces a imminent balance of payment crisis. Okay, something even worse going on there. Okay, the entire world, that's why they threw 200 bips at it. And the entire world cutting rates and easing to stimulate economies. The last thing Wall Street expected this morning from the CBRT, I guess it's the Central Bank of Turkey, that's what I'm thinking, was a rate hike, even though the Turkish lira had been hitting daily record lows every day for the past 2 weeks. And yet some moments ago, the Central Bank of Turkey shocked investors when it announced a whopping 200 pip hike in 1 week repo rate. So they're paying 8.25 to 10.25 in the first hike from Turkey in 2 years. That's a lot of cash they have to put out. It says here unleashed. Let's see. Following an aggressive easing cycle, which was unleashed when the rate hike hit a record 24% in late of 2018. Until now, political pressure from President Recep Erdogan, that's what it is, Erdogan, who was demanding lower rates, forced the Central Bank of Turkey to tighten by stealth. Instead, of hiking the main policy rate. The central bank had shut access to the 1 week repo window, forcing banks to borrow at more expensive liquidity facilities. In the end, the central bank was forced to hike rates as the lira hit record low. Also, someone else asked me about news sources. Also, I look at Dukascopy Economic Calendar. I follow that. That's another thing I follow. So that's it. See what it says. The fund has risen by almost 300 basis points since mid-July. And I said, I guess that's what's going on with the Turkish lira there. It's not pretty. I myself think it wants to go to the 8 handle. So that makes it even worse. Okay, let's see. A chance to buy a dip. I don't know. Well, we're 42 weeks in a buy. Yeah, 42 weeks in a buy. Until I see anything, I don't think anything's worth buying in that. But a chance to buy the dip on the, yeah, that's what it is. Okay, so let's see. VB says, Doc, why do you think that this lately risk-off sentiment is really hitting badly on AUD? Yeah, did you see the way that thing is ripping? I don't know. I know that Australia is dealing with the virus, and I think they're taking some of the harsher ways to do it. But let's just take a look at that. I mean, I'm really surprised. I think we're heading towards the weekly, right? Oh, let me fill this in again one more time. See if we can go back 9 days now, right there. Before the webinar's over with, there's Faraz. Hey, how you doing? Mahadi, before we end this, we'll possibly have my math filling in on the four hour bar chart. Okay. All right, now where were we jumping to? Oh, yes, Aussie. The Aussie is surprising me too. Let's see, where's it at? Right here. And there's the Aussie right there, Aussie dollar. I mean, we've been in a sell. Let's see, I guess right here we can steal one of these. So we went back into the sell there. Went into the buy there, so we can steal the buy from there and put it there, like that. And you can see we're going into a weekly sell after, what is it? Go on line, where's the Aussie on this thing? Oh, line 12, that's it. We're 23 weeks in a buy and 4 days in a sell. So we've been in a buy in this product all the way back in here in the, what is that, the 63 area. And it ran to, where the hell is this thing at? 73, 74 area. Okay, so, we're fine. Look at the weekly. Let's widen that out more. You can see the weekly is showing us that they're breaking down hard and fast. Look at this thing. It's dropped through the plus time manifold. It's dropped through the minus time manifold. I mean, this thing is running hard. I'd imagine it could be the virus is having an effect on it. That would make more sense to me. So I think that's what that is, VB. Okay, so stocks, gold, silver is still bearish. Oil likely to go bearish. Yeah, it's in a daily sell. And we had that weekly buy number. Let's take a look at oil. And it went into the weekly buy, and it looks like it may be, let's see, where's it at now? It's still holding up, and we're getting a little bounce in there still, but we're still 2 days in a sell, and we are still in the weekly buy. So it's not looking too bad when it comes to oil. That might be oil might become a flight to safety. That wouldn't surprise me any. People think the world economy is going to keep on moving. Oil is needed. I don't care if California is going to outlaw all gas automobiles. That seems to be the recipe at the moment. They're talking about getting rid of gas automobiles now. And so you can see here, there's November oil. And, it's holding pretty steady in here. And you can see the daily is trying to lift up as we speak. So, and you can see here the weekly is not exactly breaking down when it comes to oil. Wouldn't surprise me if oil became a place to run too. And all the other products are sold. You know what I mean, Daniel? That wouldn't surprise me at all. Let's see. So VB says dollar strong across the board. It is. And Daniel, let's see, says dollar index still rallying. Yeah, we closed in a weekly buy last week. Let's see if we can find that for you. I really was surprised with that myself. Where is it at? I just saw it. Where's your UP? It's in here somewhere. I know I have it. There it is. Yeah, you can see it's strong here too again. So, it's pushing up. There's definitely buying going on in here. You can see it's we went into the weekly buy last week right here. Didn't think we were going to be really emphasizing this. I just figured it'd be a quiet little pop, but things are getting a little dicey. So we're a full week into the buy, and we went into the daily buy here. So it's really moving up. You're right about that. Let's see, Doc, seems you do the webinar to another audience simultaneously. Can I find that source too? Well, we're doing, there are people coming in from my Chicago quant site. We inform them they can come to Dukascopy and ask questions and watch the markets through the eyes of Dukascopy. So we go to the Chicago quant. Can I put that? Where can I do? Here, I'll just do this really quick. Where's it at? It's here somewhere. There it is. I think that just did it. Let's see if we go like that. There it is right there. Chicago quant. See that right there? Oh, no, you can't see that. So sometimes you have people asking questions from different places. Because I have an international marketplace at the same time. So, let's see. Daniel simultaneous. Okay. And so then add unblock origin to your browser not to see ads. Oh, I don't pay. I just delete things. I don't have much of a problem with that. So that's probably what you're seeing is our Chicago quant. It's our chart there. So we set this stuff up on J4X so that traders could try to emulate my math on some level. And we do a pretty good job with it. That's why we use the J4X right here. So, in other words, during the trading day, if you're not involved on that level, you can always go to J4X and do the same inputs that I have set up for J4X. Let's see. Daniel says, it seems that the dollar is a safe bet for now. It's a flight to safety. Yeah, it really is. Silver crashed 3%. I know we were talking about that yesterday too. Here, let's put the metals up there. We were talking about it. I mean, silver's down like 20 some odd % from its high. Okay, there we go. Mahadi. Check this out. We got the 4 hour. We've got it running. There we go. With my math. Now let's go back a little bit further and give you a better flavor of it. So let's go with 11 days back. And it'll fill in a few seconds and we'll come back to it again. And then where were we headed? Oh, I know. It's the metals. Let's just take a look at the metals really quick. You can see here, there's silver. And, silver's down to 22 now. So it's gone from $30 to $22 over, or let's say that was the high there, 29 and change. So it's gone from 29 to 22, $7 haircut. We've been in a weekly sell since here. Each daily sell has been, it's been okay. This one didn't really give you much. Matter of fact, it didn't give you anything. But this one has been much better. You've been sliding all the way down on that. So, yeah, it's a really surprise. And the same thing's going on with gold. And you would think if the world is in trouble, they would be buying these things. But instead, they're selling these things. So, I would imagine expiration of the futures contract, we'll see strength just like we have. So, in late December or mid-December, we may see a nice pop in gold again. So you can see that there. We've been in a weekly sell since here. We've been in a daily sell since here with gold. Gold has been really sliding down. Let's go back to the 4-hour chart. There you go, Mahadi. You can see that right there. This is 4-hour gold. And we've been in a sell since in here. Let's go back another day. Four-hour bars, that's what it is. Let's go back one more day. We'll go back even one more day. Look at that. It's doing it. It's doing it nice. 14. There you go. Let's go back 15. Go back 15 days now. There we are. Now we're starting to get a real picture of it all. So we went into, like you can see, like that sell was an interesting sell. Right there. That would be the sell. The official sell is right there, the opening area. And that's been a great sell-off. That was an interesting bounce on the buy side right there. Here's the last sell right here. That was a nice little slide. What was that, about $20? And then there's a buy there. What was that? That's basically like a almost a $20 move. I guess we should change the color of this thing. Like that. Make it black. There we are. And then you can see the sell here. It didn't really do more than like $5 or $6 there. The buy right here was a fair little buy. It made only $20 over the 16 hours there. Let's see if we can go back a little bit further. 16. Let's see how it fills in there. Yeah. So our math works well on all products. So you can see here, it gets a little whippy right here. You can see it goes into the sell there, but it's not a sell because of that, and it's not a sell there because we have a green dot. And that's what we do here on the J4X. What we do is we use the Hinky Ashy close. They're a lagging indicator, but they emulate my dots about 65-70%, which is all right. And let's see if we can add another day and more time into it. 17. And so there we are there. There's a sell there that went sideways. That what did that do? That went into a buy, and it tried to get into a sell, but it couldn't, solely because of the green dots. So when it went across here again, you could get long it, and it was a nice little move up. Let's go back a little bit further. But it's been pretty accurate. I love doing this for that reason alone. The idea that we take something we've never looked at, or we haven't looked at in a long time. I go throw it up on the screen, and you're seeing it just like I am, fresh, live, and very good. Which indicator is the most useful? Now that's a good question. Are you talking my indicators, or are you talking about the public indicators like I have on J4X? I'll be able to answer either one of those as long as I just know which question it is. And while you're figuring that out, I will add more time to this just to get a flavor of it more. There's 20 days back. Let's see what 21 days look like. Oh, there we go. Still filling in. Let's see. There we go. That's 21 days back. Gets a little choppy in here, doesn't it? Look at that. But not too bad. That was a nice winner, because that was all sell all the way. Because let me just check this like that. Oh no, that was a buy, and then back into the sell. Well, let me see who's beeping. we go. Let me see now. Public. Okay, I would say the best public indicators you can use. Let's look at the J4X. So what we're using here is we're using a fast stochastic competing against a slow stochastic, which right there. And so and we're using just one of them in here. So we're using the, let's see if we can do this. There we go. Edit indicator. Yeah, edit indicator. There it is. And so we're using the 5-3. And how do we do this? Advanced? Okay. So I'm just using one of them. Just using the fast D on that. And we're using the slow D on that. And you can see here when it breaks through here, it has a tendency to go up in value. When it breaks down here, it has a tendency to try to go minus. You can see it tried to do it there, and then you can see it bounces right back up. Let's widen this out a little bit more. This is on a daily chart. And you know what? Let's take a look at it on an hourly chart too. Let's go to gold, and we'll take a look at it on a 4-hour chart. Let's try to do that. And so here's gold. You can see gold, the white line pierced the dotted line, the slow stochastic, and you can see the pressure on it. You can see it did the same thing inversely, and you can see the strength on it. So that would be the best way to look at it there. Now let's see if we can get a 4-hour chart. There's a 4-hour chart right there. So you can see here it goes minus. And I guess if we move, can we move that over? Yeah, let's do that. So you can see here it breaks through here, and you can see the strength comes into it. And we have these hinky ashies up there. They're kind of a lagging indicator. I wouldn't lean on that too much, but it's well worth probably watching. So let's see, what's Daniel saying about close their longs in gold and silver? Let's see, hedge funds need to cash so they can close their longs. Yeah, that wouldn't surprise me any. We have seen, you know, Daniel, we have seen where the settlements of spot versus futures have really pumped the markets up. And so since we're looking at a settlement somewhere in the middle of December, right? I mean, we're looking at 2.5 months away. We got October and November and the rest of September and half of December. So the settlement's going to be dragged along. So it's going to probably act like a European option. You know, so in other words, it'll go down and then they'll nibble on it, that type of thing, and try to buy stuff back. And let's see where it is trading right now, just a generality. You can see here, where is it at? Okay, so gold is trading at, you see gold is trading at 18.59 and spot is at 18.56. So it's just a $3 carry. So that's not too bad. And so Mahadi, that's probably the best, playing with the slow and the fast D, you know, against each other. That's probably like the best tool you can put together. I hope that helped out. All right, what else do we got going on here? Oh, you know what? I think what we're going to do is we're going to label this webinar today as 4-hour versus daily. How do you like that? That sounds pretty cool, doesn't it? Labeling the, you know, 4-hour charts versus daily charts. Yeah. That's the ticket. I like that idea. I like, you know, it's coming up with some good titles. So 4-hour charts versus daily. And that'll be the title of this webinar. Oh, no problem at all. That's why we use the J4X. This way we can actually show you indicators that are more functional or the best functional ones compared to my math. That's the whole idea, is to be able to give you a tool that during the middle of the day or on a daily basis, and you can't, let's say you've been watching our webinar, and then and then the days, then we're gone, and then in other words, you want to have an idea what things are doing, and you're not seeing my math anymore, and so that's the best thing. Here I'll show you a similarity. Let's see if we can do this. So you can see here, and if we move this up like that, so you can see here, this, where is this? This is, what is this time frame right here? Let's see if we can figure this out. So there's the 22nd, right? Going into the 23rd. So you can see here, this doesn't go plus, so it keeps you short in our work. In this case here, it gets you long for this. Unfortunately, like I said, it has 70% correlation to my math. So you can see it comes bouncing off of here, and you can see this product is still going down. Now there was probably some strength in there somewhere, but not enough that you would want to be long. And you can see this bottom here. Conventionally, you would think, okay, I can be safe. It's trying to lift up, whereas our math tells us that the same time period, just be short. You never get whipsawed out of it. You get one green dot, but it has no relevancy at that point because everything is minus here on our work. But if you're gonna lean into something, I like that more than MACD. Now you can use the third indicator, the histogram, and MACD, and that helps out. You might want to throw that out there. What else is there? I find that the two stochastics working against each other, competing with each other, is a much more predictive market. So, all right, this is it. Doc's out of here. Everybody have a safe and smart trading day. Remember, tomorrow is TGIF. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. So hang tight in there.